Hello and welcome to our webinar today on taxing the informal economy, policy, evidence, and lessons for the future. My name is Florian Jürgens-Grant. I work in WIGO's social protection team and I'll be your moderator today. Today's, I think, very exciting webinar is co-hosted by a number of great organizations. It's co-organized by the International Center for Tax and Development, ICTD, the OECD Center for Tax Policy and Administration, the Institute for Statistical, Social and Economic Research, ICER, at the University of Ghana, and WIGO, my organization, Women in Informal Employment, Globalizing and Organizing. Our topic today is taxing the informal economy. In the wake of the pandemic, low and middle income countries are facing increasing pressures to improve domestic resource mobilization. As many of these countries have large informal economies, increasing tax contributions in the informal sector has become a very popular policy prescription, something there's a lot of talk about. Many of these taxes that are being discussed fall within the category of presumptive taxes, since the earnings of informal sector workers are often not easily identifiable. However, there are many unanswered questions about presumptive tax regimes, and there's relatively little data, including about the taxes that informal workers are actually paying at the moment. Today, we want to try to close that evidence gap a little bit. And we do that by presenting two new pieces of evidence, two studies, one by the OECD on presumptive tax regimes, and one by WIGO, ICER, ICTD on the taxes and contributions paid in the informal sector in Ghana. We have a great set of speakers. From the OECD, we have Mariona Mas Montserrat, a tax policy advisor at the OECD Center of Tax Policy and Administration. We have Max Gallion, a research fellow at the International Center for Tax and Development at the Institute of Development Studies. Mike Rogan, a research associate at WIGO, based at Rhodes University in South Africa. Bert Bryce, senior tax economist and head of the country tax policy unit at the OECD Center for Tax Policy and Administration. A lot of tax, as you can see, the theme of the webinar. We have Nana Akuya Anidoho, associate professor at the Institute of Statistical, Social and Economic Research and the director of the Center for Social Policy Studies, both at the University of Ghana. And last but not least, Vanessa van den Borgaard, a research fellow at the International Center of Tax and Development at the Institute of Development Studies. So lots of interesting speakers, and I don't want to take too much more of your time. Just to say that we will first hear from the OECD. They will give us a presentation on their recent finding on presumptive taxes. OECD colleagues, you have about 25 minutes. After that, we will shift to colleagues from ICER, ICTD, and WIGO, who will tell us about their recent findings of taxes and contributions actually being paid in Accra's informal sector. And then we have space for some question and answers. So if you have any questions, please put them in the chat or ideally in the Q&A function. Following these presentations at the Q&A, we will close with some reflections from the OECD side, but also from ICTD in this case about next steps and future research and how we can work more together. Without much further ado, I want to hand over to, I think it is Mariona, or sorry, maybe Bert. Anyway, OECD, over to you. You have 25 minutes.
Bert will be
very much,
starting.
Florian. So I was going to introduce now so if you can share the presentation, thank you very much. We are very happy, Mariona and I, to be here at this webinar. I think we are presenting today. The different papers come nicely together. They're very nice, a complement to each other, and they present a lot of avenues for future work that will actually help countries to strengthen their formal economy. That will all become clear during the course of the webinar. So let me briefly introduce the paper that we've been doing, and Mariona will present the core analysis. Can you go to the next slide, please? Next slide. First, very rapidly some considerations on informality. As Florian has said, this is going to be a lot about tax, but of course one should not forget that there are tax, but also a lot of non-tax factors that will decide or that have an impact on whether or not businesses want to operate in the formal economy. The structure of the economy and the labor market, corruption, the complexity, and so on, as non-factors matter a lot, of course, as well, in addition to the tax system. It's important to remember also that informality is not an absolute status, which we basically mean that businesses that are not registered with public authorities, with the tax administration, they might still pay tax. For instance, when they buy VAT as inputs from the formal economy, and they cannot recover the VAT as they are not registered. Also, on the other hand, businesses might be registered, but it doesn't mean that because they are registered that they are paying tax on all of their transactions. They might be partly operating in the informal economy as well. And while today we will focus on micro and small businesses, of course, we should not forget that informality and of workers and companies that cannot be considered in isolation. Next slide, please. We have, as you see on the slide, we have a report where we keep track of all the tax measures that countries implement in every year. And in that report during COVID crisis, we clearly observed that a lot of COVID-related support was provided conditional on businesses and self-employed on being registered with the tax administration. And so therefore countries that where there's a large informal economy, that were informal sector workers and businesses that were not registered, that these countries face difficulties to provide support to that group of businesses and workers. So that's really, in that sense, the COVID crisis created a momentum to strengthen the functioning of the tax administration and the formal economy. Clearly also, when we will introduce the design of presumptive tax regimes, it's always good to keep in mind that the main objective of these regimes is not to collect revenues. What's very important is to bring taxpayers within the tax net for other purposes as well, for growth, to provide social protection, and so on, to facilitate the growth of businesses into afterwards the regular economy, regular tax system as well. Raising in the short run tax revenues is not and should not be seen as the main policy goal. Two key final points is that governments should make sure that businesses have an incentive to operate in the formal economy. For instance, imagine an informal sector entrepreneur who is 50 years old and who is considering to enter the formal economy. But in order to tap into benefits or pension, for instance, he or she would need to contribute for 20 years to the Social Security system. In that case, the incentives might not be there to enter in the formal economy. So it's very important that countries evaluate the design of their systems and also make sure that social benefits and public services are provided and are available for businesses and workers and entrepreneurs that enter the formal economy. And that does include, of course, also that in many cases, the tax system might have to be revised in order to make sure that it's growth friendly and that it doesn't create a too hard and too high burden on formal sector small businesses. That in itself is often a challenge in many countries. Let me now give the word to Mariona, who will present the main work we've done on the design of presumptive tax regimes. Mariona.
Hello, everyone. Next slide, please. Perfect, thank you. So as Bert was mentioning, it's important to provide incentives to micro and small businesses to operate in the formal sector. And the problem one of the big problems is that applying the rules of the standard tax system to these micro and small businesses might impose high compliance costs for taxpayers. And at the same time, it might involve high enforcement costs for the tax administration. So presumptive tax regimes, also known in the literature as simplified tax regimes, establish simplified rules that should encourage business formalization and also tax compliance, and also to reduce enforcement costs for the tax administration. These regimes usually target micro and small businesses and substitute the standard income tax and sometimes a wider range of direct and indirect taxes, such as social security contributions, the VAT, etc. These regimes levy tax on a presumed tax base that intends to approximate taxable income by indirect means. Some examples of the regimes are a tax levied on turnover or the payment of a lump sum. So no full accounting requirements are needed for presumptive tax regimes. When well designed and administered, these regimes have a formalization potential because they provide access, or they can provide access to social protection if social security contributions are included. They can also provide access to other support instruments, for instance, access to bank credits or business trainings, etc. And these regimes usually impose a lower and affordable tax burden compared to the standard tax system, and they reduce, the objective is to reduce tax compliance cost. Next slide, please. Thank you. With this illustration, I want to show the formalization potential of presumptive tax regimes. This graph is published in a recently working paper from United Nations University, and it shows how the registration of small businesses increased after improving the design of the presumptive tax regime in Uganda. And what they did is to introduce e-filing for taxpayers in this presumptive tax regime. So this e-filing allowed to reduce compliance costs for taxpayers, and therefore the number of businesses registering in the regime increased substantially after 2014. Next slide, please. However, it's important to point that not all presumptive tax regimes are effective in increasing tax compliance and business formalization. For these regimes to be effective, they need to be well designed and administered. When these regimes are not well designed and administered, there are several challenges that can take place. One challenge is that there is low take-up, maybe because the regime is too complex, or it's not well communicated, or the payments are not affordable for taxpayers. Equity issues might also arise if the regime is targeted only to specific activities, or when the differences in business profitability is not taken into account. These regimes can also incentivize the informal hiring of workers if the regime doesn't allow the recruitment of employees. Badly designed presumptive tax regimes can also induce artificial self-employment arrangements if the tax burden on self-employed in the regime and the tax burden of the employees in the standard tax system is substantially different. It can also involve substantial turnover underreporting if the design of the regime is not aligned with the monitoring capacities of the tax administration. And the regimes can also involve an indeterminate permanence of businesses in the regime if they don't have the incentives to transition to the standard tax system as they grow. So when designing these regimes, but afterwards, when monitoring the regime, it's very important to collect data and analyze it. So it's important to collect data in the initial assessment of the regime, but also afterwards to make sure that the design is aligned with the characteristics of the businesses in the country and also with the characteristics of the overall tax system. So that's why it's also important to make a comprehensive assessment of the regime and the tax system together. Next slide, please. So there is a recently new published OECD taxation working paper that discusses the design of presumptive tax regimes. Besides briefly introducing the objectives, advantages, shortcomings, and describing these regimes, this paper has two main contributions. The first contribution is that it presents an analytical framework that allows to characterize in a systematic way country-specific presumptive tax regimes. What happens in practice is that these designs vary a lot across countries, so these regimes are very different across countries, and most of the time it's very difficult to compare them. And this analytical framework allows them to characterize different regimes and identify commonalities and differences. The second contribution of this working paper is that it provides a long list of best practices in the design and administration of presumptive tax regimes. Next slide, please. So the analytical framework I was just mentioning covers several dimensions of the design and administration of presumptive tax regimes. And I will provide more concrete examples afterwards. But so it looks at which is the target group of the presumptive tax regimes, either small businesses, incorporated businesses, etc., which is the eligibility criteria required to access the regime, how the regime is defined, and how the tax liability of the regime is defined, which are the taxes covered, whether it's only the personal income tax or also social security contributions, the VAT, etc. It also covers how the regime is administered, so which are the institutions in charge of designing and monitoring this regime, but also which kind of services are provided to taxpayers, whether it's possible to comply with the regime through digitized services, etc. Another dimension that this framework covers are other non-tax support instruments, so whether these regimes allow access to bank credits or business trainings. And the last dimension is the interaction these regimes have with the standard tax system. So whether there are eligibility periods that when they expire, businesses need to transition into the standard regime, whether there are bad registration thresholds in the tax systems and how they interact with the eligibility thresholds in the regime, etc. Next slide, please. So let me illustrate how this analytical framework would look like if we would apply an example. As the following presentation will be talking about Ghana, let me explain you how the two Ghanaian presumptive tax regimes look like. In Ghana, there are two presumptive tax regimes. One is the income tax stamp, and another is a presumptive tax based on turnover. And these regimes have different target groups. The income tax stamp targets the self-employed, whereas the presumptive tax regime based on turnover targets a more broader group of unincorporated businesses. In the first case, the eligibility criteria focuses on a certain type of activities, so only specific activities are eligible for this income tax stamp, which relate to retail traders, bakeries, hairdressers, etc. On the other hand, the presumptive tax based on turnover establishes a longer list of eligibility criteria, and it also establishes a turnover threshold, So businesses exceeding 500,000 cities cannot access the regime. These businesses, the registered taxpayers can only earn business income. They cannot be registered for bar purposes, and liberal professions are excluded from this regime. So you can see there is a set of eligibility criteria. In the first case, the type of the regime is a lump sum taxation method. So this income tax stamp levies lump sum payments, while the second regime is a turnover based. It relies on turnover to define the tax base. Next slide, please. These regimes also differ in the way to define the tax liability. So in the first case, the income tax stamp levies quarterly lump sum payments that range between 3 and 45 cedis, and they depend on the business category and size. While the other regime levies a 3% proportional rate on turnover. In both cases, the taxes covered by the regime is the income tax only. And in both cases, also the institutions in charge of administering and designing the regime are the Ministry of Finance and the Ghana Revenue Authority. Next slide, please. So in the working paper, you can find the full and detailed framework. And this was just to illustrate which kind of information we are covering. As I already mentioned, the working paper also lists several best practices, more concretely 50 best practices on the design and administration of presumptive tax regimes. These best practices are grouped into 9 main guidelines, which are the following. So first, the target group will determine the design of presumptive tax regimes as regimes differ depending on which is the target group, whether it's micro or small businesses or incorporated businesses. The second guideline is that the design of the presumptive tax regime should evolve in line with improvements in the capacity of the tax administration to administer the regime. So the design really should be aligned with the administration capacities. The third guideline is that the presumptive tax regime should reduce compliance costs for taxpayers and enforcement costs for the tax administration. So really, simplicity is key for presumptive tax regimes. The regimes must be simple and easy to administer. The fourth guideline is that the design features of this regime should provide an incentive to formalize. As I was mentioning before, there is an incentivizing a formalization potential when these regimes provide access to social protection or other support instruments. The level of the tax liability imposed should be affordable for the target group, considering business profitability and also all the other taxes that are levied by the tax system and remain outside the scope of the regime, including local taxes. If possible, consideration should be given to equity in the design of a presumptive tax regime by differentiating the tax schedule by sectors or by including some form of progressivity if the target group is large. The design of this regime should facilitate and not deter migration into the standard tax system by including specific provisions that help to do so. The tax administration needs to reduce as much as feasible the opportunities for tax evasion and avoidance that these regimes may give rise to. So they should include concrete measures to prevent turnover underreporting or artificial self-employment arrangements. And last, good management of the regime requires coordination between institutions, for instance, between the Ministry of Finance and the tax administration and the local authorities. All the 50 best practices can be found in the working paper. Next slide, please. So the working paper provides, let's say, a theoretical framework, and the next steps we are currently developing is applying the framework I just described to concrete country presumptive type regimes. So as you can see in this slide, I'm not sure you can see it very well, but we are collecting very detailed information on each of the framework dimension, and also for all the presumptive tax regimes existing in a country. For instance, in Georgia, there exist 2 different presumptive tax regimes, and in Kazakhstan, there are also several presumptive tax regimes in force. Next slide, please. So for now, we have collected information for 14 different countries, also representing different locations. And in total, we have examined 27 presumptive tax regimes. And we are currently in the process of validating the information collected with countries. Once we have compiled and validated all this information, we want to identify common practices across these regimes, also to produce descriptive evidence and identify the strengths and challenges of these different presumptive tax regimes and opportunity for improved tax design. So in the follow-up work, we plan to publish this follow-up work as a working paper by the end of 2023. So far, we have covered these countries because these derived from a previous project. But if other countries would want to be included in this analysis, we would be very happy to do so if the country would be willing to share the information. Next slide, please. So just to give you a few examples of what is observed in practice derived from this benchmarking exercise, this graph here shows the different taxes covered by the regime. And so what is common practice is that presumptive tax regimes substitute the personal income tax. However, unfortunately, most of the regimes exclude social security contributions, particularly employer social security contributions. This could be improved because including social security contributions in the regime would reduce compliance costs for taxpayers, but would also incentivize and would allow to expand the coverage of social protection. And last, the target group is commonly exempted from VAT collection. This is aligned with best practices if the regime targets low-income micro-businesses, because this simplifies their compliance with the tax system. Next slide, please. What we also observe in practice is that most of the regimes are based on lump sum payments or based on turnover. So they define their tax base according to business turnover. Turnover-based regimes are good because they can better approximate different abilities to pay. However, they can lead to significant turnover underreporting if no measures are implemented to prevent this underreporting. On the other hand, lump sum taxation methods are very simple and transparent, but they might not take into account different abilities to pay if there is a unique lump sum payment. Next slide, please. This is all ongoing work, so we still have tax policy questions that we hope to answer in the future as this work develops. So for instance, we still have questions on how to integrate the VAT within the design of the regime, whether the regime eligibility threshold should be aligned with the VAT registration threshold, or whether the VAT should directly be included within the regime scope. We also have questions on whether this regime should be broadened to other taxes that are not directly linked to business income, for instance, property taxes. And we also have questions because this is not commonly seen in practice on how to integrate employer and employee social security contributions within the scope of the regime to incentivize the formalization of the employees. So we would like to develop how a presumptive tax regime should be designed to empower employees of registered businesses to request formalization of their arrangements. And we also have questions on whether it's optimal that the presumptive tax regimes includes an eligibility period so that businesses cannot stay forever in the regime. Next slide, please. So now that we have collected all this country information and we have built all this expertise, we believe that this expertise could be applied to implement country-specific analysis. So there are key questions that could be asked to assess whether a particular presumptive tax regime could be strengthened, whether the design could be improved in a way or in another, and also whether the administration of these regimes could be strengthened. So for instance, are presumptive tax regimes tailored to the characteristics of micro and small businesses of a country? Are these presumptive tax regimes transparent and simple? When looking at the country information, we can confirm that this is not always the case. Is the regime's contribution aligned with business income and type of activity? And are these regime contributions affordable for the target group? Are the eligibility criteria targeting the objective group correctly, and is it very verifiable considering the administrative capacities of the tax administration? And do these regimes allow to expand social protection coverage? And do these regimes act as an incentive for businesses to formalize and strengthen tax compliance? And also, do these regimes induce registered business to formally hire their workers? These are all questions that could be examined at the country level. And to answer these questions, survey data is a valuable source of information. Having access, as I mentioned previously, having access to data is key to ensure a proper design and administration of the regimes. So, for example, the WIGO, ICTD, and ICER survey that will be presented just in a while on self-employed informal workers in Accra would be a powerful source of information to make sure that the presumptive tax regimes in Ghana are aligned with the characteristics of the businesses in the country. So, in collaboration with ministers of finances and other partners, this expertise could be applied to any interested country and provide recommendations on how to strengthen the design and administration of these regimes according to best practices. And that's it from our side. Happy to answer any questions and provide further information. Thanks a lot.
Thank you so much, Mariana. What a fascinating information. So much presentation, so much information in there. And I think you did a great kind of segue to the next presentation, talking about the importance of survey data. A point that I picked up, what I was going to talk about is, connecting the two presentations, is around you mentioned the importance of data collection and you doing comprehensive assessment of tax system before any additional presumptive taxes are being designed. And I think this is what our colleagues at ICER, ICDD, and WIGO have done in the case of Ghana. So I will hand over to them. And yeah, the areas of research that you've outlined in the end, we'll talk about those at the closing of the webinar. I'm personally very interested in the link between social security, contribution, social protection, and taxation. So maybe this is something that can be taken forward. It sounds fascinating to me. So before I go on too much, let me give the floor to, I think Nana is going to open. But anyway, we have Nana, Mike, and Max talking about Ghana. So over to you. You have 25 minutes as well. Thank you very much.
Thank you, Florian. And we are really pleased at the opportunity to share our study and to be part of this important conversation on the evidences for and the lessons to be learned for taxation in the informal economy. In our second slide, we show the questions that our presentation will answer using the case of Accra. And as has been said, these are precisely the kinds of questions raised in Mariona and Bert's presentation. So what types of taxes and statutory fees do informal sector operators pay in this instance? And out of these payments, how do presumptive taxes compare with other kinds of taxes? And finally, how regressive or progressive are these payments being made by informal workers? The next slide gives a little bit of information about our research design. We are very pleased with our very unique survey data collected collaboratively by ICTD, WIGO, and ISA. From informal workers in Accra, or more precisely, the Accra Metropolitan Assembly, which is the biggest local government unit in Ghana, and which accounts for over a third of urban employment, informal employment in Ghana. So we used a two-stage cluster sampling approach. First, I randomly selected enumeration areas within AMA, the Accra Metropolitan Assembly, although we also took into account income classifications. So once we had this set of enumeration areas, we then went in to create a listing of all households. And then we sampled from households that had one persons who owned or operated a small business or had a small income generating activity. And the operationalization of small here was having less than 10 employees. So from people who had no employees at all to about 10. And then the second criterion was that the business activity would be unregistered. So that was just our proxy for informality. So it's important to note that the survey and the 2,700 respondents that we have are business owners or operators, not informal employees. Just to make that point. The survey was done last year between April and May. And when we look at the sample characteristics, we see that we do have quite a representative sample of small unregistered economic units within the Accra Metropolitan Assembly. And we'll show you that a bit more clearly in the next slide, which lays out the composition of the sample. So you'll see from here that about 84% of our sample are own account operators. So this is in line with Ghana's labor force survey, which shows that the vast majority, about 84% of informal income generating activities are operated by own account workers. That's people who don't have employees. Out of this number in our sample, 23% did have some unpaid family workers, but the biggest group, 61%, had no workers whatsoever, whether paid or unpaid. So I think the point to be made here that our sample, which again is representative, picks up on the really micro end of this category of micro, small, and medium scale enterprises. And what we can see from here is that really the informal sector consists of even smaller businesses than perhaps we are wont to think. And I think when we have a chance to get to the discussion, we can have some conversation about what this means for taxes. Secondly, about 3 out of 4 respondents were female, which again tracks with what the reality of the informal sector in Accra. And then in terms of occupational groups, we're intentional about trying to get street vendors, home-based workers, and market traders in that sample. So market traders are fairly easy to identify. They work within designated markets, usually in the city center. Street vendors are people who work outside of markets. Often they are close to the markets, but they tend to not have permanent structures, and some of them are itinerant. And then home-based workers, as the name implies, are people who work from their homes, sometimes from their compounds, sometimes like just outside the home that they live in. But yes, that category of home-based workers is also fairly clear. We do have another category of people who conduct their work in stores and shops. So this category is a little more ambiguous. So they are usually people who are not in markets, but they also have formal structure. So we have to parse that out a bit. But really, we want to focus our analysis on these three categories on the extreme right of the graph. In our next slide, we present the findings, the monthly earnings of our respondents in quintiles. I think the take home here is that each quintile on average earns between 2 and 2.5 times as much as the quintile below it. The highest earning quintile earns about 4,000 cedis. That sounds like a lot because it has a number of zeros after it, but it's not a lot of money. And in fact, because this survey was done almost a year ago and we've experienced inflation of more than 100%, this response that we collected from last year represents even less value. I don't usually like to change things into other currencies because you lose context, but just to give some perspective for people who may not be familiar with Ghana's economy and our currency, at today's exchange rates, the first quintile earns about $18 a month, and the highest about 365 dollars a month. That's what it stacks up to. And the very last slide that I'll share tries to show the cumulative distribution of annual earnings from our sample, and we map it onto the tax thresholds published by the Ghana Revenue Authority, just to give a sense of how much tax these informal workers would be paying if they were, in the formal economy, or if they were formal workers earning salaries that are tax deducted. So I think the basic message here is that about 25% of our sample wouldn't be expected to pay any taxes because they would fall below the lowest tax threshold as published by the Ghana Revenue Authority. So that provides some context now for a deeper dive into taxes, which Max will now take away.
Thank you very much, Nana Kuya. And with that, let's dive into the results. Next slide, please. Yes, so we'll start with taxes. The thing to say up front is that formal taxes are not the only payments that informal workers make. And that's a very, very large part of our survey, is trying to capture this wider universe of fees and levies that people pay in order to operate informal businesses. Mike is going to talk a lot more about these other payments in a minute, but I'll start here with taxes, with formal taxes paid either to the GRA, the National Revenue Authority in Ghana, or the AMA, the Accra Metropolitan Assembly. And the first picture to show you here is to push back against what is probably the most commonly held misconception of informal workers outside of this particular webinar, which is that they do not pay any taxes, do not pay any formal taxes. And what you see in this graph here is the proportion of people within our survey, within 5 income quintiles, who pay formal taxes. So you'll see this type of graph a lot in the next 10 minutes. So it's worth looking at it in a bit more detail. So you see the 5 income quintiles across the graph. The one on the left is the lowest income quintile. The one on the right is the top. And the first thing to point out here is that across these different income quintiles, including groups, which, as Nana Akuya just pointed out, would not be liable to pay any income tax under most systems, quite a lot of them are paying taxes. So on average, about 1/3 of our sample is paying some form of taxes. It's also worth pointing out that we have collected this data before the introduction of the e-levy. We've done a bit of extra writing on that on the side, but it's likely an underestimation of the proportion who are paying taxes now that the e-levy has also been introduced in Ghana. So if you go to the next slide, you'll not only be familiar with the typical type of slide for this, but also of a theme that runs through the rest of our presentation, which is regressivity. So if we now map the share of gross monthly earnings of each of these 5 quintiles that goes into formal taxes, the thing that becomes really, really stark is that the lowest income quintile is paying the highest share of their gross monthly earnings towards formal taxes. Now, it's really important to highlight here that this is not the effective rate. This is not what people who are paying these taxes are paying. So this is an average for each of these income quintiles, and it takes into account that some people in these quintiles are not paying it at all. So it's important not to look at these very small numbers and confuse them with real tax rates. We'll get to those in a second, but just to highlight again that people in the lowest quintile here are not only likely to pay taxes, but they're also likely to pay a relatively high share. But after this kind of wider look at taxes in general, it's really important to zoom in on the focus of our webinar today, which is presumptive payments. So if we go to the next slide, and the slide after that, we get to 3 presumptive payments. And we've used our words carefully here and talked about payments because not all of them are strictly taxes. Some of them are tolls and license fees, but they work in a similar structure, and it's worth highlighting them here. It's also worth highlighting these 3 ones, because if we look at the wider universes of payments, taxes, and fees that informal operators in Accra make, these are by far the most frequent. So these are really the 3 key payments to look at here. The first is the tax stamp. The tax stamp is currently suspended, but about to be reintroduced. It was suspended during COVID, and it's a quarterly lump sum payment, broadly simplified version of the income tax that people make to the Ghana Revenue Authority in exchange for a stamp that they can display on their businesses. It's categorized, so there's different amounts of payments depending on the type of business that you are and depending on the size of your business, as we already heard in the earlier presentation. And it ranged before it was suspended from about 3 cedi to 45 cedi per quarter. The second is the daily toll. And the daily toll is a part of another theme that comes out really, really strongly of our survey, which is that a lot of taxes are paid at the municipal level. So if we only look at the national level, we're missing out a really important part of the payments. The daily toll is more frequently paid by people who might be a little bit mobile, might move around a little bit more, and as the name already tells us, is paid daily to collectors from the Accra Municipal Assembly, and this is usually 1 or 2 cedi per day at the time when this was collected. And finally, the business license, business permit is another lump sum payment. It is again categorized depending on the type of business and depending on the size of business. It's usually made annually to the Accra Municipal Assembly, and it ranges dramatically from about 50 cedi for a small kente weaver to about 1,500 cedis for a larger soft drinks retailer, for example. And if we now move to the next slide. What we find is that the type of informal workers who pay these different fees is very heterogeneous. So the categories on the right-hand side here are the key ones, as Nana Akuya discussed earlier. We've got home-based workers, market traders, and street vendors in our sample. And 2 things to really point out here, for example, is that the daily toll is primarily paid by market traders and street vendors. It's much less likely to be paid by home-based workers, or the other category here, which is typically a slightly more fixed storefront situations. But the other thing that really becomes clear from this is, and this is a finding that runs through our survey more broadly, which is that market traders are by far most likely to pay a form of tax. They are by far most likely to pay more than one form of tax. And they generally, markets present a space of highly concentrated and overlapping taxation. If we move to the next slide, we now come to, I think, one of the most important and most interesting findings from our survey for the discussion that we're having today around presumptive taxation. And that is really around the regressivity and progressivity of these three presumptive payments. So what we now have here is the share of monthly earnings that are paid by the respective quintiles towards these payments if they make them. So this really is kind of the effective tax rate for these taxes for the people who make them. And the first thing that jumps out here quite clearly is that all three types of presumptive payments de facto are regressive, are highly regressive. For all three payments, the lowest income quintile on the left of each of those three graphs is by far making the largest payment as a share of their monthly earnings towards this fee or tax if they do pay that particular fee or tax. For the tax stamp, that makes that about 7% of an effective rate. For the lowest income quintile, for the license, it's about 8%, and for the daily toll, it is up to 14%. Now, if we look at them one by one, the daily toll is the least surprising out of the three. I just told you a minute ago that the daily toll is 1 or 2 cedi for everybody. So if it's a lump sum payment for the same amount, it is entirely unsurprising to us that this should be regressive, that this payment means much more to people with a lower income than it does to people with a higher income. The interesting thing to point out here is that it is quite high. And that was something when we started having conversations about this, and we started talking to our local civil society partners, started talking to informal workers about what do you think is the largest payment people make. Nobody mentioned the daily toll because it's just a cedi or two a day. But if you start adding that up, a cedi or two a day is 300, 400, 600, 700 cedis a year. And at that point, very, very quickly overtakes both the tax stamp and the permits and licenses. So it's actually very, very substantial payment, even if it only looks quite small. And the fact that it is so regressive is critical. Now, the tax stamp and the permit and license are somewhat more surprising in their regressivity, because as we've heard in the previous presentation already, they are not the same rate for everybody. So there are different rates depending on what type of business you are, and there are different rates depending on whether you're small, a medium, or large, or even a very small kind of tabletop seller. So a tabletop seller who does haircuts, for example, only pays 3 cedi, while a larger haircutting place would pay 25 cedi a quarter for the tax stamp before it was suspended. And yet we still find that these payments are quite regressive. And we think there's two things going on. The first is that, yes, a large hairdressing salon will pay more than 12 times the tax stamp that a small tabletop hair seller will pay. But what we can also see from our data is that the income of the large saloon is likely substantially more than 12 times that of the tabletop. So despite the fact that the structure of the lump sum payments of the tax stamp are meant to be progressive or at least proportional, in practice, the rates are not quite adjusted to the degree to be that. But also, there's a question of whether the smallest businesses really pay the smallest rate, whether the largest businesses really pay the largest rate. So one of the other conclusions that really comes out of this for us is that we need to look at the practice of this. And this is, I think, a wider lesson for the design as well, is that even if we get the design right, looking at the actual practices of what informal workers pay, how they engage with these authorities, and what that means for their livelihoods is really, really crucial. And with that, I will pass on to Mike to take you through the rest of the presentation.
Greetings. Thanks, Max, and a very warm hello from South Africa. Next slide, please. Next one. Perfect. Thanks. So in this final part of the presentation, we take a little bit of a step back away from the formal taxes and the presumptive payments that we've spoken about, and see how these payments stack up on all the other fees and payments and taxes that are made by workers in our sample. So what you can see on the screen in front of you is the percentage or the proportion of workers in each quintile from our sample that pay any type of payments. I'll say something in a moment about what these payments actually are. In our working paper, we break them down into 4 different categories and list the specific payments that workers make. But overall, across the quintiles, about 2/3 of workers reported paying at least one type of tax or work-related fee or payment. This was also a fairly conservative estimate. As Max has already mentioned, it doesn't take into account the e-levy, which was introduced right in the middle of our data collection process and about which we've written elsewhere. It also doesn't take into account payments to the municipality for services and such as sanitation, water, and electricity that are directly related to their livelihoods. If we consider basic services, something like 95% of the sample pays at least some type of payment or fee. So conservatively, we would say that 2/3 of our sample pay some tax-like type of payment, generally to the Accra Municipal Assembly or the Ghana Revenue Authority. You can see there's not a great deal of variation across the quintiles, with perhaps the smallest, the lowest quintile paying, having a slightly different prevalence of paying these types of taxes and fees. The next slide, please. So it probably makes sense to literally stack these payments on top of each other and then express them as a share of monthly earnings, which we've done here. In each of the quintiles, we've got colored bands denoting types of taxes and payments, some of which we've spoken about already. Again, in the working paper, we go into much more detail about precisely what these payments are. But in each quintile, the bottom light bluish colored bar denotes formal types of taxes. The cell above it denotes licenses and permits that are on a scheduled fee type of schedule. Above that, in the darker gray, come user fees that are directly related to access to infrastructure and services for work. And then the small, thin, dark-colored patch on the top of each quintile denotes informal taxes and payments, which are one of the findings here was that those are much less common in Ghana than in some of its neighboring countries. But since we're expressing this as a share of monthly earnings, you can look to the top of each column, and you see amongst the lowest earning member workers in our sample, they pay about 9% of total income on average, or monthly earnings on average, towards these different types of fees and taxes. And as Max distinguished earlier, this is not conditional on payment, so this is a fairly conservative estimate. This includes people who don't pay anything, which we count as zero, quite obviously. And what you can see in addition is that the taxes, such as the presumptive tax, the tax stamp, the daily toll, those types of taxes are the most regressive, making up about 4.1% of earnings amongst the lowest earning group of workers there, and then obviously getting increasingly less as a share of earnings. But this gives I think, a nice overall picture of all the different types of payments that are made. Again, a conservative estimate, and shows how much of monthly earnings they make up. Next slide. So typically we would present the information this way, but in a seminar that's focused on the design of taxes and presumptive taxes in particular, it probably does make more sense to reproduce that graph, but only for those who make these particular payments. So that's what we've got in front of us now. So we're calling this something closer to the effective tax rate, as Max explained. And what you can see here is that changes the picture drastically. So amongst the members of our sample that paid these particular types of payments, the tax rate ended up being something close to 17 or 18% of monthly earnings amongst the lowest earning group. Quite obviously, that's far too high. As Nana Akua pointed out earlier, roughly the lowest earning 25% of our sample really shouldn't be liable for any type of tax just based on their level of earnings. So what you can see in this graph is both a concern about affordability if we stack all these fees and taxes on top of each other, as well as the regressivity that we've seen in some of the earlier graphs as well. And you can see that if we really just focus on that lowest earning quintile at the left of the graph, it's taxes and these licenses and permits, these sort of regulated fees to the revenue authority and the municipal assembly that make up the bulk and the most regressive portions of these particular types of payments. Next slide, please. So this is our last slide presenting results before I just make a few remarks to conclude. This is the same slide that I presented in the slide just before this, but now it's broken down for women and men. And over here, we're focusing on the distribution of these effective tax rates. And what you can see is that if you look for both the men and women in our sample, the lowest three quintiles, quintiles 1 through 3, you can see the extreme variation in the payments expressed as a share of monthly earnings. So if we just look at women in the first quintile, for example, you can see that at the 75th percentile, workers in this group were paying about 25% of their monthly earnings towards these aggregated or combined taxes and fees. The median was just under 10%, but there's quite a bit of variation ranging from 0 to all the way up to 50% of monthly earnings. And then the regressivity or the share of monthly earnings gets a bit lower for each of the next two quintiles. But you can see those first three quintiles have very high variation in the payments they make. Part of this could be due to the design of these particular payments and fees, in particular concerns around high turnover but low profit types of activities. But it certainly suggests that probably a lot more thinking needs to go into the design of these taxes if we see the variation in the share of monthly earning that's paid towards these different fees. So over and above the level and the regressivity, there's quite a bit of variation, quite a bit going on within the quintiles themselves. Final slide, please. So what do we make at this, we would say, fairly unique glimpse at all the different types of payments that are made by workers in Accra? I think we could sort of condense it down into two main conclusions, and where relevant, I've sort of tagged some of those best practice points that were made in the OECD working paper that was presented just earlier. So I think the takeaway message from all of these graphs is really just that regressivity and affordability appear to be the key risks to the tax regime in Accra. It's likely to be unsustainable to have a tax system that's this regressive and in particular charges that high amount as an effective rate, particularly for the lower earning workers. A few additional points in relation to this. All of this ignores not only the newest tax, the e-levy, as well as other types of payments, in particular for access to basic services while at work. But of course, all of this ignores payments that workers make in the form of indirect payments, such as VAT. So this is all on top of that. It doesn't seem that these presumptive tax regimes allow much scope for deductions for particular types of business expenses. Perhaps some of these fees and permits should be seen as business expenses. And again, access to basic services while at work. As Max showed with his graphs, the tax stamp really shouldn't be that regressive if it's working the way it's meant to. It's got these different grades or steps, which are not meant to count for different levels of turnover and business activities. But clearly, this step system in the tax stamp is not enough, or is not closely aligned with the realities on the ground as we've measured them in our surveys. Maybe one of the biggest take-home messages is that these presumptive taxes are added on top of other local tax regimes. This is a point that was very comprehensively covered in the OECD working point as well. three different best practice measures have proposed ways of dealing with this: streamlining, having a single tax system, coordinating between local tax regimes and national tax regimes, notwithstanding the difficulties that often come institutionally there. But the problem really is that these existing local tax and license permit regimes are invisible to national tax policymakers, which means that we don't account for them or factor them in when we design our national tax regimes, and they end up being stacked on top of each other with clear problems for affordability and regressivity. And perhaps a second sort of overall point is that without a clear understanding of the context of the structure of these local taxes, fees, and business costs, it's going to be really difficult to design an effective national presumptive tax regime. And of course, the point that both presentations have made is this information is really difficult to obtain. It really does take a survey such as this, which carefully samples informal sector operators and collects this information in a very painstaking way to try and get a full picture. But without this type of research and more research, which we hope will be forthcoming, it's really hard to design tax that takes into account the realities of tax payments as experienced by informal sector workers in places such as Accra. So I'll leave it at that, and thanks to my fellow presenters, and thanks to Florian for moderating, and we look forward to engaging in some questions and answers. Thanks.
Thanks, Mike. Thanks, Nana. Thanks, Max, and the whole team. All right, now we've been getting some really good questions in the chat, and I've been thinking who might be the right person to answer specific questions. So I'm going to post that at the person who I think is best placed to do so. But if you feel like at the wrong person, or if you want to come in, just maybe just say so. We have about a little bit more than 20 or 22 minutes left, and we also want to have a closing segment. And I have a question for everybody, so if you can keep it relatively concise as you can, be great. The first question is for Bert. I mean, it's quite striking how regressive the presumptive taxes seems to be in Ghana, at least from my understanding. And it also seems that we don't often have this kind of data. So I'm just wondering, how do you feel about this? Does it surprise you? Do you think this is relatively representative of how taxes are structured in maybe similar countries? How does it make you think about presumptive taxes in general? So like, what's your reflection on the quite apparent regressivity? So that's the first part of the question. And then there was one that was posed to you, is about whether in the best practices there is a distinction made between small enterprises and self-employed workers, and how whether they're treated differently. So over to you, Bert.
Well, these are complex questions you ask me, to kick off. Thank you very much for that. It's indeed very striking. These results are very, very powerful, and I think the main message I think that our webinar wants to bring is that the type of analysis that we've been doing and that we are doing on collecting information and evaluating the design of presumptive tax regimes, bringing that together, that design and this experience, with actually what's going on in the country, with not only the impact of the presumptive tax regimes, but also all the other taxes that are levied on top, that understanding and that bringing these insights and design things together is really crucial. I mean, Mike made this very good point on that he said, like, well, some of all these local taxes, user fees are often not deductible from presumptive tax regimes, and perhaps that it's made basically the suggestion to have them deducted. I would even go further, say, like, well, in a properly designed regime, some of these user fees, local taxes, often levied by different type of organizations, different type of administrations, who all want to collect their own little bit of tax to finance their own services. They could be made deductible as a credit from the presumptive tax regime's liability, where the presumptive tax regime basically would be like more higher order national level type of tax liability. So but that's easier said than done, of course, because that requires integration, that requires coordination of the administration. That's also implications on who designs what and that the design is coherent. I mean, all of that, there's an enormous amount of work that needs to be done. And I think our work has identified that this type of research, first of all, is very fruitful, very important, but is really underutilized, or, you know, there's a lot of scope for work on the ground with this type of analysis. Basically, you know, combining the different approaches, I think is very important, because we're a lot, and that perhaps tiny bit response to the other question, is there's a lot of scope. I mean, the presumptive tax regimes are often for a bit larger businesses that actually have, you know, clearly identified turnover, and where the PTRs are often designed in ways to incentivize these businesses to enter the formal sector, but then to grow into the regular tax economy, a regular tax system, a formal economy. And these other taxes are often, well, these additional ones that are levied, which are often forgotten and often can be like a nuisance and really can be very, very harmful. So having that starting point right, I mean, if you have too many of these other taxes, you know, businesses might never enter the actual presumptive tax regime. So, you know, some thoughts that come to mind. Let me leave it at that. If I haven't responded to some, just don't hesitate to ask again.
No worries. I mean, I think this is just the, you know, maybe the beginning of further conversations on this. And yeah, I certainly take your point around combining these different lenses and different types of data. And you mentioned incentives, and I have a personal interest on social protection, as I've shared. And Nana, I wonder whether this is a question that you might want to take. There was a question posed by one around incentives for joining these kinds of systems, and, you know, recognizing, I guess, also the regressivity of it, of some of those schemes, and whether you've seen in your work a role for health insurance pensions in you know, kind of working as an incentive for people to join, and maybe in a second point to that, noting the regressivity of those schemes, you know, whether you're aware of any efforts to kind of compensate for those through either, I guess the question here is through, you know, different, I guess, transfers or taxes. So I guess similar, still with the regressivity, but whether the spending side can, whether you see it doing something to address it.
In a word, no. So, so if you consider let's say the biggest two of our flagship social protection programs, there's the Livelihood Empowerment Against Poverty, the LEAP program, that essentially provides social allowance to the extreme poor. And then the National Health Insurance Scheme, neither of those require tax registration. Now, during COVID, and this comes back to an observation that Bert made about what governments were doing during the height of the pandemic. The Ghana government did set up this coronavirus alleviation program business support scheme, CABUS, which, among other things, did explicitly state that it was interested in supporting informal businesses, and especially those owned by women. It did require tax registration formal registration and then a tax number. And so it did drive some people who were previously without tax registration numbers to go and acquire them. But I think it was a bridge too far, given the emergency situation, and also given that it was combined with other requirements like having a bank account and having tax records. It did not have the effect of bringing more people in, and it certainly didn't have the effect of helping the people who needed it the most. And as you know, Florian, we have a paper on, you know, the social protection that looks at this issue, and we find that very few informal workers were able to apply, and even fewer were able to get access to or receive this grant.
Thanks so much for that. Yeah, that's quite quite sobering. I'm wondering whether any of the other colleagues on the call, maybe kind of taking a kind of a global view, are familiar with any efforts to link to social protection. There was talk about linking taxes to social security contributions or providing other kind of compensation. And anyone want to? If not, then maybe this is something we can work on going forward. But any thoughts from anyone on that before I continue the questions?
I can provide some examples of presumptive tax regimes that include social security contributions, and this is particularly the case in the Latin American countries. So these countries commonly have a monotax regime, monotributo that it's called. And these regimes include the self-employed social security contributions within the tax payment. So they don't need to file the contribution separately, but by paying the regimes, the monotributo tax payment, they are complying with also social security contributions. And usually these regimes have different designs for vulnerable on account workers, and then a broader type of micro businesses. And usually these vulnerable workers in a vulnerable situation have lower social security contributions, and they are exempt from particular contributions, although having access to the overall range of social benefits. But it seems that these regimes are targeting the contributions to the type of self-employed and micro businesses. Thanks,
Mariana. That was a great answer. I think somebody was asking about monotributo schemes, so I'm glad we touched on that. I have a question for Mike, being the WIGO representative. Here's a question about unique circumstances of women-owned businesses in the informal economy, and whether there's something we've learned from the Ghana survey, or something we should maybe keep in mind around their particular position in the economy. Is that something you can take on?
Yeah, thanks. I mean, there are probably quite a few things we could say, but as a starting point, what we find in Accra, as we find in many other places, is that women have a greater likelihood of engaging in particular types of activities within the informal sector. And so what we found is that, as we see otherwhere as well, women are often concentrated in retail versus manufacturing. And within retail, they tend to be overrepresented in perishable goods, which means that they typically have high turnover and low profit relative to men. So we've looked at the sample a number of different ways, not just occupations, the way we've shown it in this particular presentation, but also place of work, earnings, and in particular status and employment. So we really see that women are far less likely to be in that 16% that Nana presented, that employ other workers in the informal sector. So they tend to be concentrated in the sort of lower profit, but perhaps higher turnover type activities, but then more or less evenly distributed amongst waste pickers and street vendors. So yeah, I mean, I think there's definitely a fairly typical scenario or story about the way women do different types of activities than men, that come with their own types of vulnerabilities in Accra's informal sector. We also found some really interesting results. I won't say much about it in relation to this e-levy. It was rolled out or implemented right in the middle of our fieldwork, but we were able to ask some questions about perceptions of the tax and mobile money usage. And we saw some definite gendered patterns in terms of payment of, and most particularly perceptions of, and in this case, particularly negative perceptions among women of the e-levy as an additional tax on the informal sector. I think we could probably talk a very long time about gender differences in the informal economy, but those are some of the things that we sort of picked up.
Thanks, Mike. Yeah, I know, as you say, there's a lot more we can say, but I'm glad we've at least have raised this as something to consider. The last question goes to Mike before I would call on Vanessa to give us kind of a closing reflections on where she thinks, some of this research, maybe some of those partnerships will be going. Mike, there's a question here that you might be able to answer that I'm not sure I fully understand, but I'll give it to you. And then since you're the last person to speak, you can also maybe add anything you feel that hasn't been said that you still want to mention. There's a question about third-party data, and in the context of, I think, gig economy platforms and traditional sharing platforms. I'm not quite sure. The future of presumptive taxation. Sorry, this is there's too many. This is Max. Sorry, apologies. Yeah, there's a question about data, I guess, maybe more broadly, and maybe third-party data and gig economy and all that. So over to you, and if you want, you can just share whatever you want to add, and then over to you, Vanessa.
Sure. Thank you, Florian. Mike and I have gotten mixed up or confused or be taken for the other quite frequently recently, which I take as a great compliment. Third-party data is, an extremely popular topic these days. We just had a large event at the International Center for Tax and Development last week with a lot of our revenue partners from across Africa. And the use of third-party data for tax registration has been an extremely popular topic. First thing to say is that it really depends on the type of data we're looking at, right? There's an enormous variety of are we talking about customs data? Are we talking about data from banks, from other money providers, from other sources? But also it then really becomes a question of what are we trying to use it for? So the most common assumption here is use it for registration. Mariona mentioned kind of e-filing online, or in Uganda we see issues about using third-party data to facilitate filing or to automatically register people. But I think that really then becomes part of a wider conversation, which maybe is a separate conversation to what we're having today, on the priorities of revenue authorities in Africa today, and the role that taxing the informal economy plays within those priorities. I thought it was really interesting to hear Bert say at the beginning something that certainly also been a finding on our end, which is that revenue is not the most productive mindset to go into this with. That coming into presumptive taxation, coming into taxing the informal economy purely from a revenue standpoint tends to be disappointing and tends to hit some of the most vulnerable the hardest. So coming at this from a perspective of building taxpayers in the future, of learning about the underlying economic structures, tends to be a lot more productive. That being said, using third-party data often comes at it from much more of a revenue perspective. And I think that connects to what I think is the million-dollar question on taxing the informal economy today, which is targeting, which is looking at the fact that a lot of these tax measures that we see so far tend to be quite broadly targeted and tend to disproportionately hit some of the most vulnerable. However, there are actors amongst unregistered economic units in Accra and beyond who are a lot more profitable, who are not paying, or who are not paying as much as we might want them to. So I think using third-party data to get better at targeting, to get better at figuring out where pockets of more wealth or income sit, I think that is really, really promising. And I think it's disappointing that we often think third-party data and we think increased registration rather than think third-party data and think improved targeting. I mean, especially Florian, because you said gig economy, right? I mean, there's a way of looking at Uber and going, well, we should use the data from Uber to, tax Uber drivers. Or we could look at this and say, well, we use the data from Uber to, tax Uber. But that is a wider discussion that, maybe we shouldn't have today. But I'll wrap it with that and pass it back to you.
Thank you very much. I thought that was a very nice way of Bert. Very quickly, if you want to jump in.
Very quickly, it's a super interesting topic. It relates to one of the questions that were prior in the chat, is on transit. You see that countries increasingly start to use their IT system and use more data to reach more taxpayers. And that's of course good, but it does make the need stronger or more urgent to properly design these presumptive tax regimes. So that's a strong message, I think, to stress.
Thanks so much. Yeah, I mean, I'm not a tax person, but I do take away that the design of tax systems seems to be quite important. If that's my takeaway, I hope that's correct. With that, I want to hand it over to Vanessa, who hasn't had a chance to talk, and just share with us, where do you think this? There's been a couple of ideas already being thrown in the room, but what do you think are the next things we should all be kind of working on? So over to you.
Thanks so much, Florian, and really thanks to Mariana and to Bert for the really interesting presentation and for this report, and more broadly, I think, for their willingness to engage together with us on these topics. I think one of the key takeaways for me from today is really what Bert already said about the value of blending these different perspectives and different lenses of analysis when we're thinking about taxation of the informal economy. I think our work on taxation of the informal economy in Accra, but really the work we've done more broadly on tax and informality really drives home the need for more empirical evidence, particularly of the existing fiscal burdens facing informal workers, in order to better design presumptive tax regimes, to better assess the equity implications of them, we first need to have the empirical understanding of the distribution of tax payments in relation to income within any context. And before we think about how to design these regimes more efficiently, more equitably, we also need to understand how people actually interact with and experience taxation. And a key part of this, again, as we've already discussed today, is recognizing the layering of different tax regime and different types of taxes, recognizing that taxpayers face multiple different types of payments, they engage with different actors, not just the National Revenue Authority. And while it may be tempting to exclude these types of payments in our analyses, the reality is that for taxpayers, and this is something that we hear again and again in our research, for them, it really doesn't matter if something is called a tax or a fee, or whether they're paying it to the revenue authority or to the local governments. They experience these things as taxes, and they often understand them as taxes, which really has significant implications for their willingness to pay, for their willingness to engage with the tax authority, and for their own how they're thinking about formalizing or registering. And related to this as well, I think, is the need to understand how informal businesses and workers experience taxation from the other side, which is something that we've talked about a little bit less today, but which is, I think, equally important, of thinking about what they feel that they get in return for tax payments. And again, from this perspective, it actually, unfortunately, it doesn't matter how perfectly designed a presumptive tax regime is. If people don't feel like they're getting anything in return, if they don't see services reaching them, if they don't have access to social protection, their willingness to pay, their willingness to formalize will be diminished. And that's, as we've noted, is something that we also capture in our survey and research, and I think needs to be incorporated within these discussions. So really overall, I think it's important that we ground our analyses of taxation in the informal economy within this broader perspective that recognizes both the plurality of payments and actors that are involved, as well as an understanding of the nature of the underlying social contract and the nature of fiscal reciprocity in any context. So I think moving forward, I think we're really keen to engage in more research and broader and deeper research in this topic. I think there's really a need for more types of these or more of these types of surveys in different contexts. There would be really valuable from my perspective to have more research across country contexts, as well as within country contexts. So within, for instance, within Ghana, not just focusing on capital cities, but think about secondary cities, more rural contexts, to begin to allow for more comparative analyses that will allow us to, I think, collectively think through the design of national tax regimes in relation to the informal economy that can be better tailored to the context, can do better at targeting higher income earners, as Max has already highlighted. And with this goal, I think we all really look forward to engaging further with our partners at the OECD, as well as with other researchers and revenue authority partners that are similarly seized with this topic. So thank you.
Thank you so much, Vanessa. I thought that was a fantastic, it's like closing. You put so much into that statement. And I think I agree with a lot of it, and I'm sure many of my colleagues do as well. Bert, just maybe to close things off. I wanted to pass it over to you again, very briefly.
You give me another challenge after such a fantastic summary of Vanessa. It's very difficult to, but one thing that I want to just, strengthen the argument is that the design of presumptive regimes is not, the objective, the purpose is not the presumptive tax regime in itself. It's part of this broader context and broader objectives of that social contract, of employability of workers, strengthening the power of workers to enter the formal economy and their rights, social protection, financing. It's, you know, that's the broader objectives, of course. That's why these presumptive regimes matter. And that's how they should be designed properly. And that fits also very broadly in our, or nicely within another project that we will starting together with SIDA, is on social protection financing in developing countries. And as part of that collaboration on this type of work that we've discussed today, we are very much looking forward to that type of country work. It's very important work that we believe in, and that we are very much are gonna, you know, push for, and to bring it also to our member countries and the inclusive framework. So that's not only the OECD member countries, but the 140 member countries, in order to bring everyone on board of that important work. Thank you very much.
Thank you very much. Important work indeed, and not particularly, but also the social protection angle I appreciate, and I'm very much looking forward to working with all of you on that. So with that, I just want to thank everybody who's been involved in this webinar, Sophia and Meg for coordinating, and everybody else who's participated in the studies, and you know, those who listened in asked really good questions, and of course the panelists for I think a very insightful hour and a half. Yeah, so thank you very much. I think with that, I'm ending the webinar. It's been a pleasure, and I'm looking forward to engaging further with all of you on this. So take care, and thank you very much. Bye.